Loan against securities. Investors might not have adequate amount of funding to capitalize upon the myriad opportunities that are available in the markets. To combat this, many financial institutions offer funding facilities to investors. Loan against securities, popularly referred to as LAS, is a popular funding facility. The facility allows an investor to pledge the current investments in favor of the lender and borrow funds to meet his financial as well as personal requirements. Note that the lender will accept only certain kinds of investments as security. LAS is a secured loan. Generally, interest rates vary from lender to lender. Lenders usually charge a small percentage amount as processing fees. The loan amount for which an investor may be eligible depends upon the type of security that is being offered as collateral. For example, in case equity shares, the investor will be eligible to borrow 50% of the value of such shares. Investors may prepay the loan amount without penalties. LAS is relatively cheaper form of financing as it is a secured loan. Borrowers have the flexibility to use the funds borrowed using LAS. In that sense, they are similar to personal loans. However, the lender may bar usage for speculative trading. The borrower needs to pay interest only on the amount utilized and not on the entire loan amount. The borrower of the funds retains ownership of the same and will continue to reap the benefits that accrue to shareholders in the form of dividends and bonuses. One can apply for this facility online. It is a simple and safe process which requires minimal paperwork and no guarantor. Margin calls is the biggest risk of taking a LAS, which can also sometimes lead to the loss of an asset. If the price of the shares that are pledged with the lender continues to fall, the lender may ask you to add securities or funds to maintain the margin. In a worst-case scenario, the lender may be forced to sell the shares. The shares pledged are evaluated by the lender on a weekly basis and change in price is noted. Considering that share prices tend to be volatile, this is a potentially high risk. In most cases, lenders maintain an average margin of 50%. However, based on the quality of the security being pledged, lenders may choose to maintain a 70% to 80% margin because of the volatile nature of the asset provided. This translates into low LTV. Here's a list of documents required for LAS. Notice the difference between the requirements for salaried persons and self-employed individuals. Here's the process generally followed. Complete and submit the loan application with all necessary documents. A current account for line of credit will be opened in borrower's name. Borrower may withdraw the money up to the amount sanctioned. Interest is charged for the number of days the amount is utilized. Funds acquired using LAS may be used to meet contingencies and personal needs. They may be used to subscribe to new or rights issues or for purchase in the secondary market. It is prescribed that amount of advance must not exceed rupees 10 lakh per for physical securities, and rupees 20 lakh per individual for demat securities. The lenders must see that such loans are meant for genuine individual investors. They should not support collusive action by a large group of individuals belonging to the same corporate or their interconnected entities to take multiple loans in order to support particular stocks. Regulation prescribes the minimum margin of 50% of the market value of equity shares held in physical form, and a minimum margin of 25% for shares in demat form. The lenders may choose to set them higher, on a case-to-case basis. The lenders may formulate with the approval of their board of directors, a loan policy for LAS. Obtain declaration from the borrower indicating the extent of loans availed from other lenders as input for credit evaluation. Ensure that exposure is not concentrated to the shares of a single company or a particular group of companies. The lender may also lay down sublimits with respect to company exposure.